Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Great. So really excited about my guest today, Andrew Will. Andrew Will was in the Sutton Capital Fund Accelerator a little while back. And then I think what's just amazing is you just get to meet people in person after being with them digitally. I think it was a big thing with COVID. Everyone was digital, but it's still a magical thing when you build a relationship with someone. I think Andrew, I think you were in our Slack channel a while back. Mm-hmm. And, it's just that human connection. I personally am really good with faces. So like when I saw Andrew, I knew it was you. So we got to meet, I think a couple of weeks ago at the Dirty Job Summit, which is a really good conference. So excited to catch up with this new friend. I'm going to give a couple quick bullets on Andrew. He is the managing partner at Willpower Venture Capital, which was founded in 2024. Andy Will has 6 years of experience as an early stage investor across two firms, making 23 initial seed stage investments and 14 follow-on investments, held 4 board positions, 2 board observer positions across 2 institutions. He was at Zeal Capital Partners before that and Listen Ventures. He's also done a lot of public markets investing as well in the software space. And, he was at JP Morgan for some time and at Tom's Capital Management. That consists of about 6 years. Also part of the Kaufman Fellowship. He graduated in class 28, has an MBA from the University of Chicago Booth in business with concentrations in entrepreneurship and accounting. And that's the high level bullets on Andrew. But Andrew, welcome to the show. I want to go a little deeper. I want to know who Andrew is. Tell me a little more about where you grew up, what your parents did. What did you think you wanted to do starting out in your career? And, some of the maybe pivotal moments in, your decision-making. And then obviously we're going to talk about the origin story of you building Willpower Venture Capital, but excited to unpack all of it. And hopefully you're okay with me jumping in every once in a while with, follow-on questions.
Yeah, please do. One, thank you, Joel, so much for having me on. I second that. It's just always a huge pleasure to go from a digital friend to an in-person friend as the world evolves. So it was really fun to spend some time together in New York a few weeks ago. And thanks so much for having me in this amazing community. I've been looking forward to it all week. But yeah, Andy Will, I'm the managing partner here at Willpower Venture Capital. Probably had a more esoteric path into venture more holistically. But I come from a military family. So my father and my mother were in the U.S. Army. My father for 21 years, my mother for 6 years. And so we moved around a lot as a kid, from San Antonio, Texas, Little Rock, Arkansas, Manhattan, Kansas, Würzburg, Germany, and then the Washington, D.C. area. So my father was actually a facial reconstructive surgeon in the Army. And so when the war in Afghanistan started, we got stationed at Walter Reed Army Medical Center here in D.C. And he did a lot of facial reconstruction for soldiers coming from overseas. And so I considered this home. I moved out here in middle school and went to high school out in the DC area before kind of moving away for about a decade and coming back in late 2019. But it was really formative experience growing up that way because I never was in a certain location for more than a few years. And so you always had to kind of move around into different communities with different demographics, with different socioeconomic statuses, with remake friends. I always had my brother with me, but it was always, I always found it was fascinated with new communities, new problems, how solutions were being provided in both public and private sectors, et cetera. And I always had a really inquisitive mind. I had gravitated towards math and science and knew I wanted to pursue a career that was more quantitative in nature. And so coming out of that, I was fortunate when I was in Maryland to be recruited to play lacrosse at Notre Dame. And so I ended up committing to play lacrosse at Notre Dame, where I was a finance major as well. And kind of following in the footsteps of some of my teammates who pursued a career in investment banking, I thought it would be a great avenue to develop a skill set, a quantitative skill set, and really set the foundation for my career as I was figuring it out. I really thought going into college, candidly, as we were talking about, that I would be a medical doctor because that was my entire family are physicians, including my sister-in-law, my brother, my dad. My mom's a general dentist. And so always thought that was the pathway for me. But once I got to college, I realized there was more out there, one. And then two, it felt like I couldn't really manage the lab classes with my athletic schedule and my academic schedule. It was probably a cop-out, to be quite honest with you. But decided to go in a bit of a different direction career-wise. And so after I graduated, I ended up interning at a mid-market private equity firm in New York called Arsenal Capital Partners after sophomore year. Really enjoyed that experience, but knew I wanted to go the banking path, and ended up getting an internship at JP Morgan and took a full-time job at JP Morgan after graduating in Manhattan. Spent about 5.5 years at JP Morgan, most of the time on the market side, trading equity derivatives, mainly in their software book. And so I've always been in and around public and late stage private software businesses, and really enjoyed that asset class. Taught me a lot about risk management, fundamental analysis, macroeconomics, et cetera. But I got a little tired of being a market maker, to be quite honest with you, and wanted to go deploy risk into high conviction ideas. And we were very constrained coming out of the financial crisis in terms of the proprietary balance sheet positions we could take as market makers. And so I jumped over to Tom's Capital Investment Management after my time at JP Morgan, where started as a large single family office for a guy named Noam Gottesman. We managed about $1.5 billion of his assets. And then we actually ended up building an internal hedge fund while I was there and raised another $400 million in external capital. So I worked on the public market side, investing in public software businesses, late stage private software businesses. And then we had an early stage venture team as well, and started to work with that team on more early stage fintech centric investments, given my background. I mean, I fell in love with early stage venture. I got to be honest, kind of marrying that financial analysis with more strategic problem solving, being able to have your thumb on the scale 5 to 10% in the right direction. It felt like you could have a more tangible impact on the outcomes of the investments you're making.
Yeah.
And please interrupt me at any time if anything comes up. But what coincided with that, and I'm a bit of an open book, and I don't say it for sympathy or anything. But my mom, unfortunately, was diagnosed with terminal illness around that time. And it was a big reset for me mentally. I realized that life is too short. You're not promised tomorrow. You don't know how many years on this earth you get. And so you might as well make the most of them and do what you feel like you were really passionate about. And I found venture, and it really clicked for me. I had that light bulb moment that said, hey, I want to pursue a career in this full time. I think I can be quite good at it if I set my mind to it. And so no better time than the present. So I took a hard left-hand turn, decided to leave Tom's, and I ended up being fortunate enough to get into Columbia University and University of Chicago for business school. Chose to go back to the Midwest to UChicago for B school. Was in the full-time program there, but also got a job at Listen Ventures in Chicago while I was in the full-time program. So really skewed my lat classes towards the night. And I was fortunate to place out of quite a few classes given my previous career path. And so I ended up graduating a semester early from Booth to move back to the DC area in late 2019. To start a venture fund called Zeal Capital Partners with my former partner. And we ended up raising, a little over 50 million for our first fund. We scaled that platform to close to 200 million in assets under management over a 4.5 year period, and had some really strong investment performance during that time. And coming up kind of towards the tail end of that, I felt like there was a real opportunity to practice venture in a bit of a different capacity, kind of looking at the technological shifts, some of the changes happening in the market from allocators and how they're allocating, where the LP universe was going, et cetera, how liquidity and secondary markets were evolving, et cetera, and felt compelled to jump out on my own and start Willpower Venture Capital here in late summer last year. And really the fall is kind of when we launched things. We hit the ground fundraising and got to our first close about 2 months ago. And so we're active in the market, live. I have 3 portfolio companies that I just couldn't be more excited about. And I just wake up every morning so darn excited to go do this because I'm having an absolute ball. It's not easy by any means, but I feel like I'm doing exactly what I was meant to do, and just feel very fortunate to be in this position and be able to chat with amazing people like yourself.
Yeah, thank you so much. One of the first questions I have is, what were some of the observations that you noticed when you were traveling to different cities? Maybe some nuances of different towns that you lived in. And, you said there was unique challenges, right? So different socioeconomic environments. So talk to me about that. And then talk to me about some of the skills that you had to build to adapt to different, networks and communities. And obviously in the military, there's different friends you got to made. But maybe a little bit about that, and then how that's cascaded into you, maybe context switching when you're looking at deals and investing.
Oh, yeah. I think it was one of the more impactful periods of my life, to be quite honest with you, because we lived in San Antonio, Texas, which was a predominantly Hispanic community with the very different demographics. We lived on base, but I also spent a lot of time off base at Fort Sam Houston there. So seeing all different walks of life from our military friends who were in a very similar life position to us, to those outside the community who were in a very different, both culturally and in terms of the communities that they came from. And so that was a really formative experience. And that was the kind of first stop on the in my life in terms of where we lived. Then we moved to San Antonio, Texas, which was a very much blue collar, rural, white community. And so seeing that there was so many similarities between those communities in terms of their struggles, their lack of opportunities, their lack of a lot of higher education and skills development to kind of provide career pathways, et cetera. So I felt that communities were actually more aligned than they were divided, even though they came from very different areas. And then kind of moving to the DC area and seeing the federal government and private industry at a higher level, and more of a diverse community of all different walks of life interacting together in many capacities. And so, and I think the really unifying theme there was the constant moves. Every few years, you have to be good at building relationships with people, because it's either that or have no friends, right?
Yeah.
And so I think that was one of the reasons, honestly, I gravitated towards a career in venture, is that my entire life has been building trust and rapport with people in a quick manner, meeting new people, seeing new groups of people, being able to relate from life experiences in very different walks of life, et cetera. And that is just wildly fascinating. I love learning about people. I love learning about their stories, why they're doing what they do, what makes them tick as people. And I think a lot of that analysis really lends itself to early stage investment, if you think about it. I probably didn't connect those dots for a couple decades, but there is just so much life lessons that I certainly take with me as I'm underwriting early stage investments and founder profiles and all those different attributes that can be the ticket to wild success or an underperformance from an investment standpoint.
When you started your career in middle market private equity, would love to know what was kind of going on in your mind in terms of like why you wanted to start out in PE, and maybe some of the areas that you worked in that you're allowed to share. And we'll love to know what you think makes a good private equity investor, like especially when you're thinking about middle market, and maybe for the audience, just educating people in terms of like how you look at middle market. Everybody looks at stages differently, right? Like early stage for you might be like, a little later than early stage for me. So would love to kind of hear a little education on just middle market and how you look at it. And then, just the DNA of a good PE investor.
Yeah, no, it's a great point, and I think it is quite a bit different than a venture investor. And I would say first, the things that attracted me to it were some of the most competent and brilliant people that I've ever worked with. I mean, hands down, just like incredibly driven, incredibly technically sound, but then with operational experience as well. Once they own these businesses, they're, instilling their playbook to drive efficiency, to drive margin expansion, to increase the fundamentals of the business so that they can resell that asset over time at multiples of what they paid for it. And so you're blending this really unique knowledge set and team set, and your risk is very central, right? You're owning 100% or close to a majority stake in a business. And so you really have a control element there that you don't have in venture. So it's just a bit of a different flavor. And two, the thing that really was not quite the right fit for me is it's slower moving. Transactions take many months to years to complete. You're really going deep with a specific company for a long period of time. So I think it kind of lends itself more to the founder persona of going, miles deep on a certain topic or problem and really executing against that versus having your hands in a few different pools over time, as you do as a venture investor, and having many different line items in the portfolio, et cetera. And then two, it's just slower pace, right? Like the deals take longer. You're analyzing more factors. You're doing more financial engineering than value accretion, in my opinion, at times. And so I think there's different elements that are attractive and less attractive for certain people. And you really just have to know who you are as a person. Where does your personality fit? Because if you don't really love what you're doing, you're just not going to be able to work hard enough to find the ultimate success. And so that was kind of my calculus in private equity. I think I could develop the skill set. I think I'm a quick learner on that front, but I don't know that I would really enjoy it to the level that would be required of me to be great at that. And I'm the type of person, if I don't believe I have the ability to be great at something, it's less enticing to me. I'm very much an all in or all out type of person. And I think that was a lot of the driving force that led me to start Willpower as well, is I want ownership over something to really drive it the way that I feel like it needs to be done to find ultimate success.
And when you define middle market, what's kind of like the gross revenue and maybe like the EBITDA that you guys are looking at as kind of a potential portfolio company? And how does kind of like the investment I mean, I know the diligence process is months and months, but what are some of the nuances that you've seen that are different with that whole investment process? I know there's a whole lot of financials that you got to look at where you don't have that data in venture, but there's also just probably a lot more compliance and diligence things that you got to do as well.
Oh, absolutely. I mean, they're more heritage, typically services-based businesses, less recurring revenue models, less software forward. They are typically heritage industries that are really well known, well understood. They might not be very growthy. They might be stable to slightly declining. And so a lot of the analysis is around the market dynamics, the business fundamentals, like what are the cyclical tailwinds that are going to drive growth in the market or lack of growth, et cetera. And so I think it's changing also quite a bit. I mean, it's been 16, 17 years since I was there. And so they're significantly bigger as a firm from when I was there. They were just getting started. But typically mid-market to me would be companies kind of in the few hundred millions of dollars of enterprise value to kind of $1 billion roughly, would be in that mid-market range, maybe a couple billion. And the EBITDA multiples are all over the place. I think typically a really strong, the ones that we were looking at are typically 10 to 20% type EBITDA margin businesses that have pretty strong free cash flow elements to them. And so it's just a very different calculus, and it's very much centric on the financials tell the story. The management team is a factor. There's no doubt about it, but you're also control investors. So you can always change the management team. You can replace individuals. You can step in and operate yourself. And so there's a lot of, I think the big difference between venture and heritage mid-market private equity is that control element, because really we're betting on the jockey. We want our founders to be in that seat. We want that management team to really, express their vision over time, execute against it, and build something of deep value. In the private equity sense, in my opinion, again, I've a very limited experience in private equity, so I'm sure there will be other listeners who send me an email and tell me why I'm wrong. But I think it's a lot more on the financial engineering, financial analysis, and seeing how it fits into the market.
And as far as ARR, so you said about $200 million in enterprise value. So what's kind of like the annual run rate that was kind of a good target for middle market for your guys' firm?
Yeah, I think it's because they're mainly services business. They're typically not recurring revenue multiple revenue models. They're not quite valued. They're not valued like a traditional SaaS business from a multiple perspective, right? And so I think anything, depending on the sector and the business model, anything from like 1 to 2 times revenue to 4 to 6 times revenue at the upper end of the range. So we're talking about a very different growth profile, different margin profile, different unit economics than kind of your classic software venture type play, even if they get to the level of scale that a traditional private equity might find attractive. And we're seeing actually quite a bit more acquisitions from financial sponsors in the vertical market software space. So I think there's going to be more and more market pull to making acquisitions in that space. And it's certainly something we think a lot about from a Willpower portfolio perspective.
And then even in those software business, I mean, those non-software types of businesses, I think the opportunity, we kind of heard about this at the Dirty Job Summit, there's little innovation that's needed to kind of completely transform the industry, right? So if you add a little bit of like I forgot what it's called, but it's like a chip or like a module that you can add to kind of, I think it's called like an RF, like a microcontroller, right? Like there's, I learned this because I used to work, I did an internship at like a large food company, and they would add these Band-Aids to like innovate in the supply chain, and they use these things called programmable logic controllers, and they're like little things that you can add on to like make things a little more efficient. But that could mean millions of dollars of like efficiency, like there was something that I installed that allowed us to pause the system. And this is like a very legacy focused manufacturing system for food processing, but like just pausing the system instead of turning the system off. That's like 2 hours of the productivity, which is like, probably like $10 million a year in like cost savings. So just those little things can move the needle if you can do some digital transformation. So I think that's where kind of like, as a private, like maybe as a forward-thinking private equity investor, if you're taking control stakes, kind of maybe thinking about like digital re-innovation in some of those legacy industries could be helpful.
You hit the nail on the head, Joel. And I think we're seeing a convergence between the venture and private equity space, in my opinion, in three kind of distinct areas as of late. One is, I was just speaking with a friend who has a large private equity firm that you would know. And he was just pinging me on the side. He's like, what kind of like SMB type agentic workflows are you looking at from an investment standpoint that would benefit some of our portfolio companies, and how we kind of, drive efficiency within the portfolio, et cetera. And we had a really robust and fantastic conversation about that. And I can tell more and more people are thinking about ingraining a lot of these AI workflows within their majority stake positions in their private equity firm to drive margin expansion, to drive better economics, to drive better return profile for their hold period. So that's kind of one area. Two is you're seeing, I think there was a report about it in TechCrunch, and one of my previous investments from Zeal is actually pursuing this strategy right now, is building an AI tech stack and then acquiring heritage services businesses as a roll-up strategy with the core technology offering to drive more efficiency. And you're seeing, I think Khosla is looking at this, General Catalyst has looked at it, or maybe done a couple of deals in this, and it's becoming an emerging theme within venture managers side of things. And then three is I'd probably have 5 or 6 friends from college and business school who have pursued personal roll-up strategies, right? Is where they start buying small businesses, leverage SBA loans, looking at mom and pop kind of boomer businesses that are retiring, don't have a family legacy to hand off the business to, and this is part of their retirement pool. But they typically don't have landing pages. They don't have SEO. They don't have, all this low-hanging fruit from an digital app optimization standpoint. It becomes a really attractive business model, and people have done really well with that. And so I say all to say is I can feel it converging over at an accelerating pace over the last 6 to 12 months. And I think it's incredibly exciting.
So we saw the news. I mean, I think probably about like maybe 3 to 4 weeks ago, Tribe Capital is building a roll-up focus strategy as well. So what's really interesting is I think we saw a lot of these firms develop RIAs because they're essentially just managing the wealth and providing investment advice. But, to your point, there's huge opportunity to come in and actually own a significant portion of ownership to get better upside. And then they have teams already. Like if you think about Andreessen Horowitz, like they have this whole operator team, right? These people that come in, and I was actually going to, push out a post this week. There's a role in private equity called the operating partner, where you come in and you actually are these people that come in and they just jump in and pinch hit on all these different deals and help them get to come in and work on a specific AI company and get them to 20 million in revenue. And then when that's done, they come in off the shelf and work on another project. So I think there's a whole insurgence of these operating partners that are coming out and supporting a roll-up strategy, essentially, right? Because that's how they scale. They got this team of marketers, team of sales reps that can pretty much close for any kind of business. And then they got the dev teams. And then now with AI, you can cut and paste different workflows into a new vertical. So I think that's pretty interesting.
Oh, I couldn't agree more. I think it's super interesting. And the cynical side of me thinks a little bit that a lot of these kind of large multi-stage funds have gotten so big that they just have to deploy large quantums of capital. Yeah. And this is a pretty fantastic model to deploy large quantums of capital into. And not to say it's a good or bad investment. I think on average, it is a good investment if done the right way and have the right expertise and have the right operating partners to kind of build that strategy from the ground up. And they certainly have enough money to do it. But I think it's more a reaction to the large fund model and expanding fund models over time versus, hey, we can make venture type returns on this exact model, because I think on average, from a multiple perspective, you're just not going to see there's very little potential for a 100x type of outcome in this strategy versus a pure software strategy like you've seen in driving that power law dynamic. Now, I think it has probably lower loss ratio, better risk adjusted return profile. There's probably a justification to have a barbell type of strategy in the portfolio for a fund of that size. But I think it's really interesting thought exercise to say, not only are these good investments, where are they happening, but why are they happening? And what's the driving force here? Is it AUM or is it opportunity set? And I don't know if I've shaken out in terms of my opinion of that.
Yeah. And I think to your point, these mega funds and franchises, essentially, they have to offer different products to offset the disadvantages of maybe the products that their LPs are currently bought into, right? So if you're only doing venture, it's heavily illiquid. There's no redemptions or there's no ways that you can pull out, right? Because it's not liquid. So to offset that, maybe there's a roll-up strategy where there's some more ownership and probably a faster sale time that's much more favorable than like just leveraging secondaries, right? At a higher ownership. And then when I think about it, yeah, there's private equity with a roll-up strategy. Then there's venture studios where they're building a bunch of ventures and crashing them and then hoping that one will stick based on the parameters that they set. And then there's a whole search fund methodology, right? Where like you're essentially kind of like, in my mind, the way I think about it, like it's the Harvard grad that's pretty much giving himself a job, right? He's kind of like giving himself a CEO role to operate a company, where like private equity, they're the capital allocator, but they do have the decision-making power to, completely remove an entire team and turn a company around. But they're not coming in to stand in always as a CEO. They might have to every once in a while, but like I think the big delineation between the PE with the larger ownership versus the search fund is, the search fund is, in my mind, and you tell me how you think about it in terms of those three different, approaches. I feel like the search fund, you're kind of coming in as a CEO until you maybe replace yourself.
No, I agree wholeheartedly the way you kind of articulate that, but I would almost add a fourth leg of the stool as well in terms of I'm seeing a lot of like long duration holdcos being formed as well.
Yeah.
So like 30-year fund lives where they're acquiring kind of cash flow positive, smaller but slower growing vertical market software companies or services-based businesses. And they have a central kind of hub of resource allocation in terms of how do they bolt on new businesses, increase the aggregate revenue profile and EBITDA profile of the businesses as a whole. And every kind of step up and you get a kind of multiple bump in terms of the size and scale of those organizations. And so I went to a conference down in Longboat Key at the end of last year around holdco strategies, where you had like folks from Constellation and kind of more emerging brands like that in the market. And man, I took so much away from that conference in terms of like how they're setting up, what are the things they're paying attention to. And a lot of it is, what do I want to avoid as an early stage vertical market software investor from a venture and power law perspective, where we don't want an exit that they're looking for. We might have a few of them, and we're certainly happy to facilitate those transactions, help generate cash flow for our investors, and generate a good result for our portfolio companies. That's actually a core part of our strategy. But I wanted to identify those characteristics that they're looking for in those businesses so that we can kind of, one, see if we have companies in our portfolio that fit that criteria and it's a good exit opportunity for them, we'll certainly help them with that transaction. But two, how do we actually avoid getting into those scenarios when we're getting into net new investments?
A fifth new one, like a fifth stool, I would say, or a fifth leg, I guess, of the stool that has been quite novel, and I don't really know what the name of it is, but I've seen the consulting for equity model emerge too. So marketing agencies, the problem is, if you're trying to charge a retainer, or if you're doing like sales consulting or whatever service you're doing, if you're not successful in those 2-3 months, the retainer expires and now you got to find a new client, hopefully to like, give you fresh retainer revenue, and you're kind of, you're strapped on capacity to do a good job. So, I've seen some people that have done really well that don't need the cash flow, based on whatever their service is, to actually deliver consulting services in exchange for equity. But the kicker for this is the equity is not phantom paper equity like we see in venture. The equity is actually in the form of distributions. So that's something that I thought was really, so you'd actually get cash, but you only get cash if you deliver that performance. And there's also an equity ownership stake in the company. And I think that could be really interesting too. If you're like starting out of college and you can't get the SBA loan, you can't get funding, but you can deliver services for people, right? Like, hey, maybe what I'll do is I will arrange like 10 LP meetings for you. And in exchange, like because of that service, you give me some of the GP stake, or you give me some equity or some carry or something like that. Maybe in combination with a little bit of cash, but like a lesser amount of cash than it would be like of a salary. And like the upside is that you get that equity, which you would only get that equity if you had capital, right? So that's I don't know what that category is, but I just think the consulting for equity model is something that I've been seeing a little more. If you're not able to raise capital, or if you don't prefer to raise capital, or if you don't have the capital.
I couldn't agree more. I'm definitely seeing a lot of that in the market. And I would say one of the things that I advise our companies and just companies that I talk to on kind of engaging those type of relationships, whether it's consulting or if it's just advisor who's going to have some type of equity stake in the company, et cetera, is to just make it really milestone based in terms of hard data of what value they drive. Because candidly, I'm going to try and do it without, completely divulging this. But I know an individual who's a very early advisor of a large neobank that may or may not be IPOing this year, who maybe worked with the company 2 or 3 hours in totality. Mm-hmm. You're going to make, 8 figures on this exit.
So, if you hire a coach for equity, right? What is a tangible, I think there needs to be cash coming in the door, right? So if you're doing sales and bringing in real money in the door, that is hard, tangible lifeblood results, right? Versus I coached you for 2 hours. So
exactly.
Give me 10% equity in the company.
And it might be great. It might be worth it 100%. I always just try and make a point system, right? Whether it's hours worked, whether it's introductions made, whether it's, however you want to structure it. But I do encourage people to be very thoughtful about that, because once the equity's gone, it's gone. And so you really want to make sure that you're getting the value for those, because that's the other thing is when people are distributing equity, they don't think about it in dollar terms as well, right? And so if you have a $10 million company and you give them 1% of equity, you're giving them $100,000. Yes, it might not be fundamentally valued that way yet, but I think you have to train yourself in thinking in that manner if you're confident in what you're building, et cetera, and you will make different decisions in terms of how you structure those relationships.
Yeah, and disclaimer: always talk to an attorney. I know some really great ones, please. But I would say, and the only thing I would say is, we do in venture land, we do have some of these templates. We got the FAST agreement, and I think I've used the FAST agreement in the past, and it is kind of structured in a way where it is bound by either cash or equity, and then there also is some hours of commitment as well to earn that. So I think that's interesting too. But you always want to probably talk to somebody that's qualified that can, especially if it's impacting your ownership or control in the company. So it's definitely important. If you were to hire somebody, and we'll talk about venture in a few minutes, but if you were to hire somebody in middle market private equity, what's kind of the hard skills and the soft skills and maybe culture fit that you would look for?
Yeah, I think it's evolving. I think one is, I think almost all mid-market buyout companies tend to hire out of banking programs to your analyst programs at investment banks, just because you're getting that core modeling skill set, right? You're doing it day in and day out, multiple times a day, many hours a day for 2 years. You're a rock star at modeling by the time you're done with that program. And that's a big part of being a private equity analyst, right? You're modeling out the financials. You're doing a lot of the grunt work around making sure all the information is there. And so that the more senior folks can really underwrite the investment and decide, do they want to do this? How do they want to operationalize it, et cetera. And so from a skill set perspective, it's very quantitative. So you want to be able to display either, I think they tend to gravitate towards finance majors, accounting majors, mathematics majors in undergrad, who typically have some banking experience. I think the old guard typically will give you a 2-year contract to come in at a mid-market buyout shop with the knowledge of saying, hey, you're going to go to business school and we'll, either sponsor you at business school or we'll hold your role, or they'll just turn it out and hire someone new. There's many kind of structures there, but kind of the old path is, hey, be an analyst at private equity, go to business school for 2 years, come back as a senior associate and kind of climb the ladder that way. I think it is shifting just because I don't think business school is perceived quite the same way as it was previously. And there's more flexibility in outcomes, but I think it really comes back to that core technical financial skill set that is a necessity to go do that work. And it's not rocket science by any means, but they want you to be very competent going into that. And then from a personality standpoint, any private equity firm that I interviewed at, we always did personality tests, which is, I find very interesting because I think there is a huge cultural fit there. I think it tends to lend itself to more introverted people who can, do siloed work, who get energy from doing more quantitative analysis, who are patient and have longer term time horizons and less instant gratification. I think those are some of the attributes that tend to thrive in that environment. And me personally, I'm a little ADD. I like to move quick. I don't know if you can hear how quickly I speak. I love to build relationships with people, et cetera. It's not to say I couldn't do that, but I just didn't get energy from that environment. And that's why I gravitated towards the trading floor, because it's the polar opposite. It's chaos at all times, loud noises and people interacting and all those type of things. And clearly didn't stay in that career path, but I feel like venture has actually blended the two together because I'm constantly meeting new people on a daily basis, whether it be LPs fundraising or founders building interesting things, new hires hires that we're bringing on, et cetera, that it's something new every day. We're learning every day. It's something that's incredibly exciting to me, and it really fits my personality. So that's what I always encourage people is take personality tests, be really introspective about who you are as a person and what skill sets you think you have and give you energy, and then pursue a career path that fits that mold. And so it takes testing. I went on a few before I found what I believe is right for me, and I plan to do it.
No, I mean, I hear I've pivoted my career like 3 times. So I got the same question for venture, but one dial tighter with kind of aligning with your culture. So tell me about the values of Willpower Venture Capital and like what you look for from a culture perspective when you're looking to make your first hire, and then also the, obviously like the technical skills that you're looking for and the soft skills.
Yeah, no, it's such a good point. And I'll take this from my biggest mentor, a guy named Kevin Compton, who runs Radar Partners in Palo Alto and formerly a Kleiner Perkins GP. He's just an incredible individual and has taught me a lot throughout my career. And he always talks about being a servant leader. And that's always struck a chord with me, because I do think that is a core element of venture. Because look, at the end of the day, we're financing companies. We're always minority owners of the business. We're certainly not the stars of the show. The founders are the stars of the show, who are, putting, years of their life and hours on end on a daily basis building something of meaning. And we certainly play a role in that ecosystem, but it's not the main role. And I think too many people in our industry take credit for the accomplishments of entrepreneurs. They overrepresent how much that they did to drive that outcome, et cetera. And this isn't me kind of bad-mouthing, our industry, because I love it. And I think there is a ton of value and such honor in it. And there's a lot of patriotic elements to it that I talk about often. And I truly love it. But I think when we think about our culture, it's honesty, integrity, and focus. And so we want to, if we say we're going to do something, we do it 100 times out of 100. And if there's, a 1 in 100 chance that it doesn't happen, we're going to amend that relationship and say, hey, this didn't happen for this reason. Here's how we're going to remedy the situation, because it takes so long to build that trust and rapport, but so easily lost. And so we always say what we mean what we say, and do it in quick order, or tell why we can't do it that way. And so when we're hiring people, we really underwrite for trust and honesty. Skill set we can teach, drive less teachable, but we want to underwrite for having extreme drive, grittiness, willpower. It's not a mistake that we named willpower that way. It's really the attribute we love in founders in terms of their ability to persevere through up and down times. Like there's always going to be a roller coaster ride when you're on this journey, but how do you kind of keep that mental fortitude to keep pushing forward and keep driving the vision that you see as possible and execute on a daily basis? And so the skill set itself as a venture, it's more art than science at the end of the day. But I think the core components are that trust, honesty, grittiness, drive, and ability to be a constant learner. And so those are the attributes we try and underwrite for folks who join us. We try and underwrite for founders that we partner with, and we try and get better about on a daily basis. I have a little sticky note up on my computer right here in front of us every single day that just says, focus on the inputs, not the outputs, because the outputs take care of themselves. If you stay true to your culture, stay true to what you want to do on every day, and get just 1% better every day. You don't have to be 20% better every day, but just get 1% better every day.
No, that's super inspiring, and I really appreciate that. That was really helpful. I want to talk a little more about leadership, and the reason why is I've read a lot of books. I don't know if people have read John Maxwell, but like there's all these. He has a book called like the 5 levels of leadership, and there's different ways that you can motivate people, right? There's people that, motivate people with fear. There's people that motivate people with incentives. I've had GPs that have hired executive coaches to kind of train them on culture. But like, what's advice that you would give on just leadership as a whole, right? As a GP, as a founder building a firm, obviously you talked about servant leadership, which is probably the main answer, but how do we, do you think leadership is learned, or do you think it's, innate in some people, or do you think it's a combination of both?
Not to take the cop-out answer, I do think it's a combination of both, but I'll kind of further extrapolate. And similar to you, I'm a huge student of leadership. I think it's such a crucial element to anything you do in your life, right? And so I try and read books on it, I listen to podcasts on it. I also listen to a lot of military leaders, because I think there's a ton of lessons to be learned from that echelon to what we do in private industry. And it's actually one of the passions in my life is I specifically work with former special operators as they're getting out of the military to understand to quantify their skill sets and see where they might fit into private market and help kind of make that transition a little bit easier. And so I say that all to say is that this is definitely a big focus for us. And I think everyone is born inherently with a different kind of cup of where does their leadership aptitude lie, right? And some might be bigger than others. And unfortunately, life's not fair. Everyone's kind of born with a different skill set, a different IQ, a different opportunities based on where you grew up, family dynamics, et cetera. But you can certainly get better at it. And I think someone I learned a lot from is a guy named Jocko Willink, who's a former Navy SEAL officer, who is the task unit commander in the Battle of Ramadi. And he has multiple books on leadership. And he talks a lot about this concept of good. As a leader, you take 100% accountability for every mistake the team makes. And he doesn't mean that lightly. He means like something terrible happens, you say, good. Here's the benefit to that. Like I got a no from an LP that I thought was going to be a yes. Great. Learned something from the feedback that they gave me. I probably didn't present it in the right way. They didn't get this part of our strategy the right way. We have this, that's on me. That's not on them, that they didn't see something in me. I didn't present it in the best way possible. And I need to learn from that experience in the next one that we do. And so I try and take that attitude to everything that we do, is that whatever happens on the negative side, it is 100% my fault. And you have to own that. And even if you don't feel that way intrinsically, do some introspection, because I will almost guarantee you'll be able to figure out a few things that you could have done better that could have shifted the result to something different. Or if it's something that's just complete bad luck, like for instance, we did our first close about 10 days after Liberation Day. So you can imagine how that was a little funky going into a close there, and, not every investment that was intended to come in came in, and things of that nature. And you could certainly get very upset about that happening. And look, I can't control policy at the federal level. I can't control market dynamics around the timing of our close, et cetera. But I can control how I handle that. And I was angry the day it happened. And the next day I said, you know what? We need to get back to work, and we need to fill the gap, and we need to continue to build relationships. And I bet you we can actually turn some of these investors who got cold feet at the end of the day. And so it's all just kind of that.
Yeah. I saw something in my feed like literally 3 days ago, and it was pretty groundbreaking for me. And it's like very stupid and very common sense. But the video was like something in my Instagram or something, but it was like sales is a reset game. So you could, do fundraising. You could do, you could try to go on, multiple dates. And like, the thing is, if something didn't work out, there's always a new person that may not know about all the reasons why it didn't work out. And you can actually just hit reset and start over again without all the baggage, and probably, kind of to the point when you said good, it's good because you probably are not going to do maybe follow up with the same mistakes that you made 2 seconds ago on the previous prospect, but there's a brand new prospect right afterwards, so it really is, if you think about it, fundraising, sales, dating, job searching, it's a reset game. You're going to get rejected hundreds and hundreds of times, but there's that one new prospect that's there 10 minutes later.
Totally. And though someone said this to me really tangibly the other day, and they said, you only get upset at no's if you have a pipeline issue. Right?
Yeah,
like if you have a limited number of opportunities and you get a no and it's like 1 of 10, that's 10% of your opportunities gone. If you have 100 of them, you're like, oh, whatever, next one. Let's keep moving the ball forward, right?
Yeah, and then I think, you get better. I think tech teams, sales teams, enterprise teams, they measure this down to the T with data, right? So you can take data to really understand, how many, on average, like how many leads do you need to have in your pipeline to possibly have a conversation. And then, you kind of go down the funnel, like that conversation turns into a sale, and like there's a rate at like that sales process of like closure. And if you can measure that and, hopefully make it somewhat repeatable, that helps. There's nuances with B2B versus like consumer. But I think the power of software is you can just sell one thing thousands and thousands of times, which is great.
Totally agree. And, I'm so nerdy that on this fact that I record every meeting, every pitch that I do, and then I feed it into AI to give me a voice readout of that meeting when I'm driving in the car and things like that, so I can learn from it and be like, oh, I said. Are
there any tools that you recommend that will synthesize your call and how you did? Like that'd be really great for GPs. Like if they had an LP call, like maybe just the inflection of how you spoke and maybe how you handle objections. Like if there's got to be, I mean, it's not in my mind now that we have ChatGPT, I feel like there's got to be some system for like sales reps and GPs or people or founders raising money.
That definitely exists. I mean, not quite the level of granularity you're talking about. I know a lot of people in the industry use Granola, and they just had a big financing, and everyone loves that service, and I think it's fantastic.
Yeah. So Granola is kind of the closest one. It's kind of
or Tactic is what I use. It's very similar to Granola on that side, but it gives you the output of the transcript. It has really fantastic AI summaries of what exactly happened. You can convert it to a podcast and like listen to the verbiage that way via Google's. What do you call Notebook LM? And so you can take this transcript, feed into that, and then I could have a little podcast in the car when I'm listening. So I try and find creative ways that we can learn all the time because I drive a lot and things like that. And if I have to, I'll listen to a call and learn something from that, or I'll listen to a podcast like the Founder Podcast with David Senra. I think you have to be a student of history, and so learning from the most exceptional founders over the last 150 years of American history, or internationally in other geos. I just think there's so many, whether it's a completely different industry, you can learn about leadership lessons. You can learn about company culture. You can learn about focus on kind of small and tangible things that drive performance over the long run. And so I don't know. I don't know if it's just me being nerdy. I don't know if we'll see over the long term how impactful it is. But I think you have to take every bit of information available to you because it's hard to be successple no matter what. You need every advantage that you can.
Well, Andy, I know we got 3 minutes left. I feel like I still got probably like another hour. I could probably, unpack with you, and we'll do that over cocktails next time. Yeah. But I think, look, we got 3 minutes. 2 questions. What was the pivotal moment that made you decide that you wanted to build Willpower? And then you've already shared a lot of wisdom. Maybe one more piece of advice from a mentor or like a past work experience.
Yeah, no, I mean, I think it's twofold, and one comes with a quote from a mentor. And I'd say the first being I was on the first paternity leave that I was able to take actually for my third child when I was thinking about willpower in earnest. And so I had a bit of time for 3 weeks to be at home with my family and to just have some time to sit down and think about what do I want to get out of the next couple of decades of my career? Like, this is a long game. We're going to be doing this for a long time. So what is going to drive the most value, the most happiness, the most opportunity, et cetera. And so I started to kind of think about like, what do I want to build and what are the shifting market dynamics? Why do I feel like I need to build something? Because it's easier to go join a firm that's already established. But if you think there's a new concept to be had, a new way to operationalize things, then you need to go build it yourself. And so fast forward, I flew out to the Bay Area to meet with my kind of 3 core mentors. And one of them kind of stopped me mid-sentence. And he said, Andy, if you can't bet on yourself, who the heck can you bet on? And that rocked me to my core. I got to be honest with you. I thought about it the entire flight home, and I had a conversation with my wife about it in the morning. And I just said, hey, honey, like, here's what I really want to do. Here's how I'm thinking about it. Here's the timeline. Here's what the cost is going to be in the interim. Here's how it's going to affect our family, et cetera. And I had her full confidence to go do it. And so I like to leave it with it. I could never do this without my wife. She is my rock. She's an amazing person. She keeps me focused when I have moments of doubt in myself. She keeps the family train running on time, et cetera. And so without her and without my mentors, I just don't know if I'd have the stamina to go do it. And I'm just beyond thankful that we have, because I can see the light at the tunnel getting brighter every day. I'm having an absolute ball every day. I'm learning 10 times more than I ever have in my career on a daily basis. And so, if I'm a betting man, which I am, I think it'll be a good result in the end, but it only comes with work. It's not going to happen unless we keep doing this every day. Yeah, no, I totally agree. I think if you've got family and you've got your health and you've got a support system, you can literally do anything you want, but it's not going to be a smooth sailing road. I mean, so that's really what's going to help you mentally to be resilient, along with physically, to have the willpower as you stated. And then, and just kind of being able to handle like whatever comes at you. So I think I totally agree with that. I was going to say something else, but I'll share that later because I can't remember it. But well, one thing I actually forget, you mentioned that I just forgot to bring up because I do think it's important, and sorry to push us over a minute. No worries. Is the physical resilience side of things. I do think that's huge. I get up every single morning at 5 a.m. and work out every single morning because I built a home gym in my basement, because it's just such a huge element to, if you're feeling good physically, if you're more clear mentally, you have more stamina to work harder, you have more enjoyment, et cetera. And I think it is a missing link that we need to normalize in the professional senses. You can still work 15 hours a day and still work out. They're not mutually exclusive. You could
Yeah.
throw a few push-ups in between meetings, et cetera. There's many ways to do that, but I do think there's an inextricable tie between physical readiness and mental readiness.
Yeah, no, I totally agree. Well, Andy, this was amazing. Really appreciate you opening up about everything and sharing your story, many levels deeper. And I know the community really appreciates it, and, appreciate all that you do for the founders as well. And you taking the time out to come in here and educate us.
No, thank you so much for welcoming me into the community, Joel. It was an absolute pleasure, and I'm just very thankful to call you a friend and then get to spend some time together in person, and hopefully much more of that here in the near future.
Yeah, likewise, Andy. Take care, and everybody else have a great day.
All right, thank you so much.
All right, bye.